All right, so what I want to talk to you about is what is called a VA assumption. So an assumption is if a seller has a VA loan on that property, they can allow another veteran to assume that VA loan. Now they can technically allow a non-veteran, but we'll get into that later. But let's take a veteran, for example. So let's say the seller, they're selling their home for $400,000 as an example. And let's say they owe $350,000 on their mortgage still. And let's say they have a 3% interest rate. A veteran that has entitlement, right, can choose to purchase that home from that seller for $400,000. Goes on a standard purchase agreement. They're purchasing it for $400,000, and they are going to cover that difference between the $400,000 purchase price and the remaining principal balance. That's $50,000. They're going to bring that much cash to closing, wire, cashier's check, but they have to cover that difference. And generally speaking, that needs to be cash. Pull it out of a 401k, HELOC from another property, something like that. It's just not part of the mortgage. But what that allows the assuming veteran to do is they're going to then, when they close, they have a $350,000 mortgage at 3% interest rate in this one example. And let's say those previous veteran, the sellers, were, say, 4 years into their mortgage. Well, when that veteran closes on that loan, they're also 4 years into the mortgage. So that means that, you know, the payment's going a little bit further when you're making one because it's amortized a little bit differently, but it's just a huge benefit. So I've done some of these where it saved the veteran $500 a month, and I did one recently where it saved the veteran $1,300 a month. It's all going to depend on what is the remaining principal amount and what is the interest rate. So I said earlier, a seller can allow a non-veteran to assume it. There's risks associated with that. If the assuming person doesn't make the payment, you're never responsible for that payment. It never hits your credit report or anything like that, but it can affect your entitlement that you have for other VA loans. But in a standard veteran assuming another veteran's VA loan, then it's just your entitlement is released upon closing, and then you can go out there and continue to use your VA loan again. So I have a big network of veterans that I've helped put into homes using their VA loan. So if this is something that interests you, reach out to me. But you're gonna, in almost all cases, need to have some money to put down. Now that gap depends on how long have they been in the home, what's the value of their home, how much they pay down the principal. But I'm working one today where there may not even be a gap that's needed. And the veteran would get this low 3% interest rate. So it's a great program. Now it's limited in options, or as far as like how often we're going to see these, because, you know, veterans only make up about 5.5% of the Minnesota population. So it's like, you know, you're taking out about 95% of the properties that are out there. But when you can find one, it's an excellent opportunity, because you're just going to save a lot of money. So if you have any questions about that, put them in the comments or just shoot me a message.